Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the recent price surge exceeding previous highs. The forecast price also indicates continued growth in the coming weeks, reaching a projected high of $97,200. This suggests a strong potential for capital appreciation over a longer investment horizon. Therefore, a long position in Bitcoin is recommended with an entry price around $94,500, taking advantage of a potential dip before the anticipated price surge. The stop loss should be set at $92,300, aligning with the identified support price, to minimize potential downside risk. The target price is set at $98,800, aiming to capture the majority of the projected price increase and align with the resistance level. This strategy allows for a balanced approach, maximizing potential gains while mitigating risk through a well-defined stop loss. Based on the provided Ethereum price data and forecast, a medium-term investment strategy appears to be the most prudent approach. The historical price data shows a fluctuating trend, with recent upward momentum. While the forecast predicts continued upward movement, reaching potentially higher levels in the coming weeks, it also indicates some potential for short-term volatility. This suggests that a medium-term investment horizon would allow for capturing the potential gains while mitigating the risk associated with short-term fluctuations. A long position is recommended for this strategy. An ideal entry price would be around $3,300, slightly below the current price, allowing for some margin of safety. The stop loss should be set at $3,175.48, the identified support price, to limit potential losses. The target price could be set at $3,550, aligned with the forecast and representing a significant potential upside. This strategy allows for participation in the anticipated upward trend while managing risk through a well-defined stop loss and a realistic target price. The provided data suggests an optimistic outlook for Ripple. The historical price shows a consistent upward trend, culminating in a recent peak at $1.47. While the price has slightly retreated, it remains above the support level of $1.119, indicating strong underlying buying pressure. The forecast predicts continued upward movement, with prices expected to reach $1.56 within the next week. This suggests a potential for short-term gains. Given this analysis, a medium-term long position in Ripple appears promising. An entry price of $1.43, slightly below the recent high, would allow for a potential profit margin as the price moves towards the forecast target of $1.56. The stop loss should be set at $1.35, a level below the recent dip, to mitigate risk. This strategy allows for participation in the anticipated upward trend while managing potential downside. Solana exhibits a strong upward trend in its historical price data, with consistent price increases over the past 2 weeks. The current price is positioned near the support level of $222.1, indicating a potential buying opportunity. The forecast price suggests further upward movement, reaching $249 in the near future. Considering the positive price momentum and the forecast, a long position in Solana appears to be a suitable strategy. To execute this strategy, an entry price of $235 could be considered, aligning with the current price and allowing for some room for price fluctuation before entering the position. A stop-loss order should be placed at $225 to protect against potential downward price movements. The target price could be set at $255, aiming to capture a significant portion of the potential price increase suggested by the forecast. This strategy focuses on a short to medium-term investment horizon, capitalizing on the anticipated upward movement of Solana in the coming weeks. Based on the provided information for Cardano, a medium-term investment strategy with a long position appears promising. The historical price data reveals a clear upward trend, with the price bouncing back strongly from dips. Although the recent price has dipped slightly, the forecast predicts a continued upward trajectory, reaching above $1.15 within the next week. This suggests that Cardano has the potential for further growth in the medium term. Considering the support price at $0.7996 and the resistance price at $1.066, a conservative entry price would be around 95 cents, allowing you to enter the market after a potential pullback. A stop-loss order could be placed at 85 cents to limit potential losses if the price drops unexpectedly. The target price should be set at $1.10, aiming to capture a significant portion of the projected price increase. This strategy balances risk and reward, taking advantage of the positive price momentum while mitigating potential downsides. Based on the provided price information for Coin, a cautious investment strategy leaning towards the long-term perspective appears most suitable. The recent 2-week price history reveals some volatility, with the price fluctuating between $3.19 and $3.78. However, the forecast suggests a slight downward trend in the coming week, reaching a low of $3.44. While this indicates a potential for short-term price correction, the historical data also shows a general upward trend. Considering this, a long position with a conservative approach is recommended. An entry price around $3.45 aligns with the predicted low and offers a potential for profit if the upward trend resumes. A stop loss at $3.35 would limit potential losses in case the downward trend persists. The target price should be set at $3.75, aiming to capitalize on the previous highs and potential future growth. This strategy allows for capitalizing on the long-term potential of Coin while mitigating risks through a well-defined stop loss and a conservative entry price. Based on the provided price information for Filecoin, a medium-term investment strategy appears most suitable. The historical prices show a consistent upward trend, reaching a peak of $5.71 and currently hovering around $4.53. Although the forecast predicts continued growth, reaching $6.35 within the next week, the recent price dip suggests a potential consolidation period before the next upward surge. This consolidation phase presents a buying opportunity for a medium-term investment. An ideal entry price would be around $4.768, the support price, allowing you to buy at a potentially undervalued point. The stop loss should be set slightly below the support at $4.60 to minimize risk. The target price could be set at $5.71, aiming to capitalize on the previous high and the forecast's projected growth. This strategy allows for a balanced approach, capitalizing on the bullish trend while managing risk during a potential consolidation period. Given the price trends and forecast for Theta network, an aggressive investment strategy would focus on a long-term approach to capitalize on the upward momentum. The historical prices show a consistent upward trajectory, with the current price near the support level of $1.716. The forecast suggests Theta network could continue to rise, reaching prices as high as $2.14 in the coming weeks. This indicates a bullish outlook in the medium to long term, making a long position the most suitable strategy. For this strategy, an entry price of $1.88 would be ideal, allowing you to buy in before the price potentially reaches its resistance level of $1.959. The stop loss should be set at $1.75 to protect against any unexpected price decline. The target price should be set at $2.10, allowing you to take profits before the market reaches its projected high. This strategy aims to capture a significant portion of the potential price appreciation while mitigating risk through a well-defined stop-loss order. Based on the provided information for Dogwifhat, a cautious long-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with no clear consistent upward or downward momentum. While the forecast suggests a slight upward movement, the price range remains relatively narrow. The support and resistance levels also indicate a potential for sideways movement rather than a significant price break. Therefore, a long position is recommended, with an entry price around $3.25, aligning with the current price and recent historical lows. The stop loss should be placed at $3.05, below the recent support level, to minimize potential losses. The target price can be set at $3.50, aiming for a moderate gain as the price potentially approaches the resistance level. This strategy prioritizes capital preservation while allowing for potential growth over a longer timeframe. Based on the provided price history and forecast for Stellar, a medium-term investment strategy appears most suitable. The historical data shows a generally upward trend, with recent price fluctuations suggesting a period of consolidation. The forecast indicates continued upward momentum, with prices potentially reaching $0.625 in the coming weeks. This suggests that Stellar is poised for further growth in the medium term. Therefore, an investment strategy focused on a long position is recommended. A suitable entry price would be around $0.484, slightly below the current price, allowing for a margin of safety. The stop loss should be set at $0.425, aligning with the lower end of the forecast range and providing a cushion against potential price corrections. The target price could be set at $0.602, aiming to capture a significant portion of the anticipated price appreciation. This strategy balances risk and reward, allowing investors to participate in the potential upside of Stellar while mitigating potential losses. Given the price trends and forecast for Starknet, a medium-term investment strategy appears promising. The historical prices demonstrate a fluctuating trend with periods of both upward and downward movement. However, the forecast suggests a positive upward trajectory over the next week, indicating potential for price appreciation. The current price is situated near the support level of $0.5058, suggesting a potential buying opportunity. Therefore, a long position is recommended for Starknet. An entry price around $0.5058, aligning with the support level, would be suitable. To manage risk, a stop-loss order should be placed at 48 cents, below the recent lows. The target price could be set at $0.609, the recent resistance level, aiming to capitalize on the potential upward movement predicted by the forecast. This medium-term approach allows for potential profit from the anticipated price increase while managing risk through a well-defined stop-loss. Based on the provided data for PENDLE, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with no clear long-term upward or downward momentum. The forecast price suggests a slight upward movement over the next week, but this is not significant enough to warrant a long-term investment. Given this, a short-term strategy focusing on a long position with a conservative approach is recommended. An entry price around $5.25 would allow for potential profit if the price rises towards the resistance level of $5.413. The stop loss should be set at $5.10 to minimize potential losses if the price drops unexpectedly. The target price could be set at $5.35, aiming to capture a reasonable profit before the price potentially retraces. Based on the provided information for Render, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with recent upward momentum. While the forecast suggests continued growth, reaching $8.61 in the coming weeks, the price remains relatively close to its support level of $5.207. This indicates potential for further price increases, but also a risk of retracement. A medium-term approach allows us to capitalize on this potential while managing risk. Therefore, I recommend a long position on Render with an entry price around $7.60, slightly below the current price, to allow for a small dip before entering the position. The stop loss should be set at $7.30, below the recent support level of $7.34, to minimize potential losses. The target price can be set at $8.40, aiming to capture a significant portion of the predicted price increase while leaving room for potential fluctuations. This strategy allows for a balance between risk and reward, aiming to capitalize on the upward trend while mitigating potential losses in case of a market correction. Based on the provided VeChain price history and forecast, a medium-term investment strategy appears to be the most suitable approach. The VeChain price has shown a consistent upward trend over the past 2 weeks, with the forecast indicating continued growth in the coming week. The current price is hovering near the support level of $0.03357, suggesting a potential buying opportunity. Therefore, an investment strategy for VeChain could involve taking a long position at the entry price of $0.0340, with a stop loss set at $0.0330 to mitigate potential downside risk. The target price could be set at $0.0450, aligning with the resistance level and the forecast suggesting further price appreciation. This strategy capitalizes on the bullish momentum while managing risk through a defined stop loss. Holding the position for a medium-term period, potentially 2 to 4 weeks, allows for sufficient time to benefit from the anticipated price increase. Based on the provided data for Binance Coin, a medium-term investment strategy appears most suitable. The historical price data reveals a general upward trend, with recent fluctuations around $620. The forecast suggests continued upward movement, peaking around $664 in the coming week. This indicates a bullish outlook for Binance Coin in the short to medium term. Therefore, a long position is recommended, aiming to capitalize on the anticipated price increase. An optimal entry price would be around $625, aligning with the current price and historical trends. The stop loss should be set slightly below the recent support level at $615.55, safeguarding against unexpected price drops. The target price could be set at $660, allowing for a significant profit margin while still leaving room for potential further growth. This strategy balances risk and reward, targeting a medium-term gain within the next week or two, aligning with the bullish forecast and historical price trends. Based on the provided information for Conflux, a medium-term investment strategy appears most suitable. The historical price data shows a recent upward trend, with the price fluctuating between 14 cents and 18 cents. The forecast indicates continued growth, suggesting a bullish outlook for the coming weeks. However, the price is currently near its resistance level of $0.1847, indicating potential for a short-term pullback before continuing its upward trajectory. Therefore, a long position is recommended for a medium-term investment strategy. The entry price should be set at 17 cents, allowing you to buy in after a potential short-term dip. The stop loss should be placed at $0.162 to mitigate risk in case of a more significant price decline. The target price should be set at 19 cents, aiming to capitalize on the anticipated price growth towards the resistance level. This strategy allows you to benefit from the long-term bullish trend while managing risk through a well-defined stop loss. Based on the provided information about Worldcoin, a short-term investment strategy with a long position appears to be the most suitable approach. The historical price data reveals a general upward trend, with the recent price hovering around the support level of $2.394. The forecast predicts a continued upward movement, reaching up to $2.68 within the next week. This suggests a potential for capitalizing on the bullish momentum in the short term. Therefore, an entry price of $2.45, slightly below the current price, would allow for a potential profit as the price moves towards the forecast target. A stop-loss order should be placed at $2.39 to minimize potential losses if the price unexpectedly drops below the support level. The target price could be set at $2.58, aligning with the higher end of the forecast range, allowing for a reasonable profit margin. This strategy capitalizes on the anticipated short-term price increase while managing risk through a defined stop-loss order. Based on the provided price information for Avalanche, a bullish investment strategy appears to be the most suitable approach. The historical price data shows a generally upward trend, with recent fluctuations around the $35 to $43 range. The forecast price suggests continued upward momentum, reaching values between $40 and $46 in the coming week. This aligns with the support price of $35.47, indicating a strong base for potential price growth. Considering this positive outlook, an aggressive short-term investment strategy could involve entering a long position at the current market price, around $41, with a stop loss set slightly below the recent support level at $39. A target price of $45, aligning with the upper end of the forecast, would allow for a reasonable profit margin within a short time frame. This strategy capitalizes on the anticipated upward movement while managing risk through a well-defined stop loss. Given the price trends and forecast for Jupiter, a cautious investment strategy would focus on a short-term approach, capitalizing on the potential for minor price fluctuations. The historical prices show a recent period of consolidation with a slight downward trend, while the forecast suggests a continued, albeit gradual, decline. The support price at $1.0461 and resistance at $1.2465 indicate a range-bound market with limited potential for significant upward or downward movement. Therefore, a short position is advisable to capitalize on the anticipated decline in price. An entry price of $1.13, aligning with the recent price action and the forecast, would be suitable. The stop loss should be set at $1.15 to protect against any unexpected price recovery, while the target price should be set at $1.07, taking advantage of the projected decline towards the support level. This strategy allows for potential profits while managing risk within a volatile market. Given the price trends and forecast for EOS, a moderately aggressive investment strategy would focus on a short-term approach to capitalize on the anticipated price increase. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near its forecast and close to the support level of $0.679. The resistance is at $0.8436, indicating potential for further upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An optimal entry price would be $0.745, aligning with the current price and allowing for immediate participation in the potential upward movement. A stop loss should be placed at $0.679, the support level, to limit potential losses if the price unexpectedly drops. The target price should be set at $0.8436, the resistance level, aiming to capture the maximum potential profit from the anticipated price surge. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Based on the provided historical price data and the forecast for TRON, a medium-term investment strategy appears most suitable. The historical prices demonstrate a general upward trend, with recent fluctuations around the $0.200 mark. The forecast suggests continued upward momentum, with prices potentially reaching $0.214 within the next week. This indicates a positive outlook for TRON in the short to medium term. Considering this outlook, a long position would be advisable. An ideal entry price would be around $0.202, slightly below the current price and close to the resistance level. This allows for potential upside as the price moves towards the forecast target. A stop loss order should be placed at $0.1947, below the support level, to limit potential losses. The target price could be set at $0.213, aiming to capture a portion of the anticipated price increase while allowing for some room for market fluctuations. Given the historical price data and the positive forecast for SE, a bullish investment strategy is recommended. This strategy suggests a long-term investment perspective, aiming to capitalize on the potential for continued price appreciation. The entry price should be set at $0.5408, the support price, which acts as a strong foundation for the potential upward movement. The stop loss should be placed slightly below the entry price at $0.531, protecting against unexpected price drops. The target price should be set at $0.747, the highest forecasted price, allowing for significant potential profit as the price climbs towards resistance. This strategy capitalizes on the positive price trends and the forecast suggesting further growth. The long-term perspective allows for time for the price to reach the target, mitigating the impact of short-term market fluctuations. By carefully selecting the entry, stop loss, and target prices, this strategy aims to maximize potential returns while minimizing risk. Given the provided price history and forecast for Shiba Inu, a short-term investment strategy appears to be the most suitable approach. The recent price history exhibits a slight upward trend, but the forecast suggests a potential pullback in the coming week. This indicates a short-term opportunity to capitalize on the anticipated price decline. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, around $0.0000257. A stop-loss order should be placed at $0.0000262 to limit potential losses if the price unexpectedly surges. The target price for this strategy would be set at $0.0000250, aiming to capture a profit from the anticipated price dip. This strategy leverages the short-term price prediction while incorporating risk management measures to protect against unforeseen market fluctuations. Given the price trends and forecast for Dogecoin, a medium-term investment strategy focusing on a long position appears promising. While the historical prices show some volatility, the overall trend suggests upward momentum. The forecast indicates continued price appreciation, reaching up to 47 cents within the next week. Furthermore, the current price is hovering near the support level of $0.39085, indicating a potential buying opportunity. Therefore, an entry price of $0.395 would be strategic, allowing you to buy in at a price slightly above the support level. The stop loss should be set at $0.385 to mitigate risk in case of a sudden price drop. The target price could be set at 46 cents, aiming to capture a significant portion of the forecasted price increase. This strategy allows for a medium-term hold, capitalizing on the anticipated upward movement of Dogecoin while managing risk effectively. Given the price trends and forecast for Hooked Protocol, a medium-term investment strategy appears most suitable. The historical prices demonstrate a general upward trajectory, but with some recent volatility. The forecast suggests continued growth, with prices potentially reaching $0.545 in the coming weeks. The support price of $0.3857 provides a safety net, while the resistance at $0.5066 indicates the potential ceiling for this upward movement. Considering these factors, a long position in Hooked Protocol is recommended for a medium-term investment horizon. An ideal entry price would be around 43 cents, slightly below the current price and above the recent support level. This allows you to capitalize on potential price appreciation while minimizing risk. A stop-loss order should be placed at 40 cents to protect against significant price drops. The target price could be set at 50 cents, aiming to capture a portion of the anticipated upward movement. This strategy balances risk and reward, allowing you to potentially benefit from Hooked Protocol's projected growth over the medium term. Based on the provided data for Aevo, a bullish investment strategy appears most promising. The historical price data reveals a fluctuating trend but generally points upwards. The forecast price suggests continued upward momentum over the next week, reaching levels above the current price. This upward trend, coupled with the support price at $0.391, indicates a strong foundation for potential price appreciation. Therefore, an investment strategy focusing on a long position in Aevo is recommended. A suitable entry price would be around $0.400, allowing for a buffer below the current price and potential dip before the anticipated upward movement. A stop-loss order should be placed at $0.390 to minimize potential losses if the price unexpectedly drops below the support level. The target price could be set at $0.460, aiming to capture a significant portion of the projected price increase based on the forecast. This strategy aligns with a medium-term investment perspective, capitalizing on the expected price appreciation within the next few weeks. Based on the provided price information for Litecoin, a short-term investment strategy appears to be the most suitable approach. The 2-week price history shows a fluctuating trend with a slight upward bias. However, the 1-week price forecast suggests a potential pullback in the near future. Considering the forecast and support/resistance levels, a short position could be profitable. An entry price around $0.00803, slightly above the current price, would allow for a small margin of safety. The stop loss should be set at $0.008651, the support price, to limit potential losses. The target price could be set at $0.00733, aligning with a recent low point in the price history and factoring in the anticipated price decline. This strategy capitalizes on the potential for a short-term correction while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Coin, a medium-term investment strategy would be suitable to capitalize on the expected price increase. The historical prices demonstrate a fluctuating pattern with an overall upward trend. The current price is situated near the support price, indicating a potential buying opportunity. The forecast suggests a gradual increase in price over the next week, reaching levels above the current resistance. Therefore, a long position is recommended for Coin. An entry price of $0.0218 could be considered, aligning with the current price and providing a buffer below the support level. The stop loss should be set at $0.02146, the support price, to minimize potential losses. The target price could be set at $0.0235, the resistance price, aiming to capture a significant portion of the anticipated price increase. This strategy allows for a medium-term investment horizon, benefiting from the expected price appreciation while managing risk effectively. Based on the provided Pepe price information, a cautious investment strategy focusing on the short term is recommended. The historical price data reveals a fluctuating trend, with recent prices hovering around the support level of $0.000187. The forecast indicates a potential for slight upward movement, but the resistance level of $0.0000232 suggests limited upside potential in the near future. Considering this, a long position could be considered. An ideal entry price for a long position would be around $0.0000195, slightly above the current price and close to the support level. This allows for some room for price appreciation while minimizing risk. The stop loss should be set at $0.0000188, just below the support level, to protect against potential downward movement. The target price could be set at $0.0000210, aligning with the forecast and providing a reasonable profit margin. This strategy allows for potential profit from a short-term price increase while managing risk effectively. Based on the provided Coin price information, a medium-term investment strategy appears promising. The historical price data shows a consistent upward trend, reaching a recent high of $6.31. The forecast also suggests continued growth, with prices predicted to rise to $6.65 within the next week. This indicates a bullish outlook for Coin in the medium term. Given this positive outlook, a long position is recommended. An optimal entry price would be around $6.07, aligning with the current price and allowing for potential upside as the forecast suggests. The stop loss should be placed at $5.981, slightly below the support price, to minimize potential losses. The target price should be set at $6.314, the recent resistance level, aiming to capitalize on the anticipated price surge. This strategy balances risk and reward, allowing for potential gains while protecting against significant losses. Based on the provided historical price data and forecast for Bitcoin Cash, a medium-term investment strategy appears to be the most suitable approach. The historical price shows a general upward trend, with recent fluctuations around the support price of $463.20. The forecast indicates continued upward movement, reaching potential highs near the resistance price of $513.50. This suggests a bullish outlook for Bitcoin Cash in the coming weeks. Therefore, a long position is recommended. A strategic entry price would be around $490, aligning with the recent price action and providing a margin of safety below the forecast highs. A stop-loss order should be placed at $465 to protect against potential downside corrections. The target price could be set at $510, aiming to capture a significant portion of the anticipated price increase while allowing for some room for potential fluctuations. This medium-term strategy allows for potential capital appreciation while mitigating risk through a well-defined stop-loss. Given the price trends and forecast for Chainlink, a medium-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near the support level of $15.28. The forecast suggests a continued upward movement, with prices potentially reaching $19 in the coming weeks. This indicates a bullish outlook in the medium term, making a long position suitable to capitalize on the anticipated price increase. An optimal entry price for this strategy would be around $15.50, slightly above the current support level. This allows for some room for price fluctuation before entering the position. The stop loss should be set at $15.20 to protect against unexpected downward movements. The target price could be set at $18.50, which represents a significant upside potential while staying within the projected price range. This strategy aims to capitalize on the bullish momentum of Chainlink in the medium term, allowing for potential profits while managing risk effectively. Polkadot shows a strong upward trend over the past 2 weeks, with the price climbing from around $5.31 to a recent high of $8.72. The forecast predicts continued growth, reaching $10 within the next few weeks. Considering this positive momentum and the forecast, a long-term investment strategy appears promising. Entering a long position at the current price of around $8.24 offers a good entry point. A stop-loss order should be placed at $7.97, slightly below the recent support level and the first predicted price drop. This protects against sudden market reversals. The target price can be set at $9.89, aligning with the highest predicted price, allowing for significant potential profit. This strategy capitalizes on the bullish trend and the predicted price appreciation, aiming for long-term gains. Given the price trends and forecast for Near protocol, a medium-term investment strategy appears promising. The historical prices show a general upward trend, with recent fluctuations around the $6.018 support level. The forecast suggests a continued upward trajectory, with prices potentially reaching $7.40 within the next 2 weeks. This indicates a bullish outlook for Near protocol in the medium term. Therefore, a long position is advisable to capitalize on the potential for price appreciation. An entry price of $6.17 aligns with the current price and the forecast, allowing for potential gains as prices move towards the target price of $7.02. The stop loss should be set at $6.018, the support level, to protect against any unexpected downward movement. This strategy aims to capture a significant portion of the forecasted price increase while managing risk effectively. Given the price trends and forecast for stacks, a moderately aggressive investment strategy would focus on a short to medium-term approach. The historical prices show a slight upward trend, with the current price hovering near its support level of $2. The forecast suggests a continued upward momentum, with prices potentially reaching $2.27 in the coming weeks. This indicates a bullish outlook in the short to medium term, making a long position the most suitable strategy. An ideal entry price would be around $2.03, allowing you to buy in at a relatively low point while still benefiting from the anticipated price increase. The stop loss should be set at $1.95 to protect against any unexpected price drops. The target price could be set at $2.20, allowing for a reasonable profit margin before the price potentially encounters resistance. This strategy balances risk and reward, aiming to capitalize on the upward momentum of stacks while mitigating potential losses. Based on the provided data for Aptos, the 2-week price history demonstrates a relatively stable range-bound movement with a slight upward bias. The forecast indicates continued stability around the current price levels. The support price at $10.38 and resistance price at $12.28 further suggest a confined trading range. Considering these factors, a medium-term investment strategy appears most suitable. A long position would be advisable, aiming to capitalize on the potential for Aptos to reach the resistance level of $12.28. The entry price could be set at $11.50, allowing for a small buffer below the current price. The stop loss should be placed at $10.50 to limit potential downside risk, and the target price could be set at $12.10, aiming to capture a significant portion of the potential upside within the trading range. This strategy balances risk and reward, taking advantage of the expected stability while allowing for potential gains. Given the price trends and forecast for Litecoin, a medium-term investment strategy appears most suitable. The historical prices demonstrate a consistent upward trajectory, reaching a recent high of $99. The forecast suggests continued growth, with prices projected to reach $102 within the next week. The support price of $83.36 provides a solid foundation for this upward movement, indicating a strong buying pressure. Therefore, a long position is recommended for this medium-term strategy. An ideal entry price would be around $92, aligning with the recent price action and providing a margin of safety before the anticipated price increase. The stop loss should be set at $89 to protect against potential short-term pullbacks. The target price could be set at $100, aiming to capture a significant portion of the projected price appreciation while leaving room for further upside potential. Given the price trends and forecast for Uniswap, a medium-term investment strategy focused on a long position appears promising. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near its forecast and support level. The resistance level is notably higher, indicating potential for further price appreciation. To execute this strategy, an entry price of $9.80 would be strategically placed, allowing you to capitalize on the anticipated price increase towards the resistance level. A stop loss at $9.20 would safeguard against unexpected market reversals, while a target price of $11 offers a reasonable profit margin, aligning with the forecast and leaving room for potential further growth. Given the price trends and forecast for Bittensor, a medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating pattern with an overall upward trend. While the forecast suggests a slight dip in the short term, it indicates a continued upward trajectory in the medium term. This suggests that Bittensor could experience a period of consolidation before resuming its upward movement. Therefore, a long position is recommended for a medium-term investment horizon. An entry price of $518 would allow you to buy in near the current price, while the stop loss should be set at $496 to protect against a potential deeper correction. The target price could be set at $545, aligning with the highest historical price and the forecast's projected upward movement. This strategy aims to capitalize on the expected medium-term price appreciation of Bittensor while managing risk through a well-defined stop loss. Given the price trends and forecast for Internet Computer, a bullish investment strategy would focus on a medium-term approach to capitalize on the anticipated upward momentum. The historical prices show a consistent upward trajectory, with the current price near its forecast and close to the support level of $10.722. The resistance is at $12.33, indicating that there is still room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. Therefore, an aggressive medium-term investment strategy would involve entering a long position at $11. The stop loss should be set at $10.722 to protect against any unexpected price decline. The target price should be set at $12.33, aiming to capture the potential upside movement towards the resistance level. This strategy allows you to benefit from the predicted price increase while managing risk through a defined stop loss. Given the price trends and forecast for Artificial Superintelligence Alliance, an aggressive investment strategy would focus on a short-term approach to take advantage of the relatively stable upward momentum. The historical prices show a consistent upward trajectory, with the current price close to its forecast and near the support level of $1.364. The resistance is at $1.463, indicating that there is still some room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $1.38 would allow you to buy in at a favorable price point, while the stop loss should be set at $1.35 to protect against any unexpected price reversals. The target price should be set at $1.45, aiming to capture a significant portion of the potential price increase before reaching the resistance level. Optimism shows a strong upward trend over the past 2 weeks. The historical price data demonstrates a consistent rise, culminating in a recent peak of $2.29. This upward momentum is further supported by the price forecast, which predicts continued growth over the next week, reaching as high as $2.36. The support price at $2.168 provides a safety net, indicating a potential floor for the price. Considering these factors, a long-term investment strategy in Optimism appears promising. An ideal entry point would be around $2.20, taking advantage of the current price level while allowing for potential dips towards the support price. A stop-loss order could be placed at $2.16, safeguarding against unforeseen market reversals. The target price should be set at $2.36, aligning with the forecast high and maximizing potential profits. This strategy capitalizes on the bullish trend while mitigating risk through a well-defined stop-loss order. Given the price trends and forecast for Ethereum Classic, a medium-term investment strategy focused on a long position appears promising. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near the support level of $28.63. The forecast indicates further upward movement, projecting prices to reach $32. Considering this bullish outlook, a long position would allow investors to capitalize on the potential for price appreciation. A suitable entry price would be around $29, aligning with the forecast and providing a margin above the current support level. To mitigate risk, a stop-loss order could be placed at $28.63, protecting against a sudden drop below the support. The target price could be set at $31.91, the resistance level, aiming to capture a significant portion of the anticipated price increase. This strategy balances risk and reward, allowing investors to potentially benefit from the upward momentum of Ethereum Classic in the medium term. Based on the provided price information for Ethereum name service, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a consistent upward trend, with the recent price hovering near the support level of $22.18. The forecast indicates further price increases, potentially reaching $24. This suggests a bullish outlook for the short term. Therefore, a long position is recommended to capitalize on this anticipated price increase. An ideal entry price would be around $22.50, slightly above the current support level. The stop loss should be placed at $21.80 to minimize potential losses if the price unexpectedly drops. The target price could be set at $24, aligning with the forecast and allowing for a reasonable profit margin. This strategy aims to take advantage of the short-term bullish momentum while managing risk effectively. Given the price trends and forecast for Solana name service, a short-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a fluctuating trend, but the recent upward movement and the forecast suggesting continued growth point towards potential for further gains. The current price sits close to the support price, indicating a potential base for further upward movement. The resistance level, however, is not too far away, suggesting a need for a cautious approach. Therefore, an aggressive short-term investment strategy could involve entering a long position at the current price of around $0.225. A stop-loss order should be placed slightly below the recent support price, around $0.218, to protect against unexpected price drops. The target price could be set at the resistance level of $0.2404, aiming to capture a significant portion of the potential price increase. This strategy capitalizes on the anticipated upward momentum while managing risk effectively. Given the price trends and forecast for Aave, a medium-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near its support level of $172.61. The forecast indicates a potential rise towards $181 in the coming weeks, aligning with the historical upward momentum. Therefore, an aggressive medium-term investment strategy would involve entering a long position at $173, a price point slightly above the current price and below the resistance level. The stop loss should be set at $172 to protect against potential downward movement, while the target price should be set at $180, aiming to capture a significant portion of the anticipated price increase. This strategy allows for potential profit while managing risk through a well-defined stop loss. The provided data for Injective suggests a bullish outlook for the short to medium term. The historical price data shows a general upward trend, and the forecast indicates continued price growth. The support price of $25.84 acts as a strong foundation for further upward movement, while the resistance price of $28.17 presents a potential ceiling for the immediate future. Given this analysis, a long position in Injective appears to be the most suitable strategy. To capitalize on this potential, an entry price of $26.50 could be considered, aligning with the current price and the forecast for continued growth. A stop-loss order should be placed at $25.85, just below the support price, to mitigate risk in case of an unexpected price reversal. The target price could be set at $28, aiming to capture a significant portion of the anticipated upward movement before encountering the resistance level. This strategy allows for potential profits while managing risk effectively within a short to medium-term investment horizon. Given the price trends and forecast for Polygon, a medium-term investment strategy focusing on a long position appears promising. The historical prices show a consistent upward trajectory, with the current price hovering near the support level of $0.4585. The forecast suggests a continued upward movement, with prices potentially reaching $0.632 in the coming weeks. This indicates a bullish outlook in the medium term. Therefore, an investment strategy involving a long position in Polygon is recommended. A suitable entry price would be around $0.492, aligning with the current price and allowing for potential price appreciation. The stop loss should be placed at $0.4585, protecting against significant price declines and aligning with the identified support level. The target price could be set at 57 cents, aiming to capture a portion of the anticipated price increase while staying below the resistance level of $0.5702. This approach balances risk and reward, allowing for potential profits while mitigating potential losses.